And now, family members and listeners alike, let's go to work. I need you to pay close attention, take copious notes, and let's look at some positions that will get us P.A.I.D. as they are currently poised to move to the downside. And this will allow us an excellent capability and an excellent opportunity to get P.A.I.D. Now, short selling does seem kind of weird to the uninitiated, okay? And taking put options on positions seems kind of weird to the uninitiated. But serious flaws in companies that cause those companies to move to the downside are indeed money-making opportunities. So someone says, well, how can you really make money when a company's shares fall? Well, for the most part, you are just reversing the buy process for stocks when you want to short them or when you want to go ahead and take put options on them. Now, keep in mind that some of the world's top investors are pretty good short sellers and put option takers. They understand that it is extremely tough for any company to keep up the growth and fight fierce competition that they may be experiencing. So why not make money off of this? Now, although there are certainly risks to short calling, taking shorts on positions, or taking put options on positions, perhaps one of the biggest is the proverbial short squeeze. Now, let me explain to you what a short squeeze is. This is when a stock spikes because of the forced buying of the short sellers who need to cover their positions. So yes, you really need to do your homework, as we always say in the Ask the Wiz Wealth Institute, and not have too much of short positions or put option positions in your portfolio. But despite all of what I just said, boy, oh boy, there are quite a few opportunities for shorting and call options out there that will get you P.A.I.D. If anything, the recent fall off in the tech arena after a big move on the upside is an indication that markets could be poised for a correction. So let's now discuss, let's analyze 4 interesting stock positions that are prime candidates for shorting on the straight up stock buy or put options on the option contract buy. The first company, and with each company, I'm going to tell you what are their current woes. The first company I want to give you is Valiant Pharmaceuticals. Valiant Pharmaceuticals trades under the symbol VRX. That's VRX, V like Vivian or Valiant, RX. Now, since its latest earnings report, Valiant Pharmaceuticals has been in a rally mode, but this is likely to prove to be short-lived. The fact is that VRX is a broken company indeed. Until recently, the strategy was to aggressively buy drug operators, cut costs, and hike prices. But given the political backlash from both sides of the aisle, we're talking about Republicans and Democrats, this model is, well, shall we say, ailing. Now, the main strategy now is to unload various assets. After all, VRX has accumulated a massive $28.5 billion debt load. Now, it is indeed true that the asset sales have gone well so far, but it will likely get tougher. The reason is that VRX has focused on the best assets first. And in the meantime, Valiant will need to fend off its competitors, which see an opportunity to strike and to deal with the inevitable demoralization of the workforce. This is why revenue continued to fall. They were off by 11% in the latest quarter. Now, VRX will also have to contend with multiple drugs that will come off patents, as well as impact from legal judgments, such as over the accounting scandals that the company had. Sooner or later, it's going to have to grow its revenue and income using the pieces of itself it ultimately intends to keep. I'm talking about VRX. And that's something we've not yet seen enough of. This company is springing leaks at multiple points. And therefore, we must see now what others see eventually and look at VRX as a possible put option upon completion of the appropriate drill down. Next company I want to give you is Under Armour. Under Armour, symbol UAA. Under Armour, symbol UAA. Now, when it comes to short selling, there are often opportunities with fallen growth companies, okay? Why? Well, all in all, they are usually many investors that are still hoping that the problems are temporary. This means that they can be an inflated valuation, okay? Yet, as the growth continues to fade, the stock price will have to give way to gravity. Now, I think this is the predicament of Under Armour, okay? Trades under the symbol UA and under the symbol UAA. Now, despite the evidence to the contrary, management is still boasting that the growth story is intact. And yes, there are still lots of believers who are drinking the Kool-Aid on Wall Street. Note that the forward price earnings ratio is at 42 though. But consider that the UAA is taking big hits from mega rivals like Adidas and Nike, who have the resources to fight the brutally expensive wars for sponsorship and much broader product lines. Well, you too will see that UAA has some problems on the horizon. In UAA's latest quarter, North America sales fell by 1%, largely due to the awful performance of the footwear category. And more importantly, UAA is showing a lack of creative juice. Let's face it, the product offerings are not showing as much differentiation. This also extends to the marketing. UAA seems to be playing from a traditional playbook of focusing on brand name athletes. But in contrast, Adidas has shown more moxie, if you will. Just look at the successes with its sponsorship deals with hip hop artist Kanye West. Another nagging issue with UAA is that the company has lagged with e-commerce. For the most part, it is relying on a distribution model focused on retailers. Yet the industry has been under assault by players like Amazon, okay? And as seen with the bankruptcies of Sports Authority, Golfsmiths International, Eastern Outfitters, and Sports Chalet, Amazon is knocking them down. UAA better figure it out quick, fast, in a hurry. Next put option candidate I want to give you is First Solar, symbol FSLR. Now, top short sellers like to see disruptive industry changes when coming up with targets. Often this involves new technologies, but it could also mean changes in politics or politricks. So a spot-on example of the latter, talking about changes in politricks, is First Solar, symbol FSLR. Now, the company is dependent on federal subsidies and taxes. Listen to me closely now. But the Trump administration has made it clear that this kind of support will be highly scrutinized. This is evident in the move to abandon the Paris Accords. But at the same time, Trump has assembled a cabinet that is far from supportive of next generation technologies. Yet, this actually is not the full picture of the situation. You see, we must keep in mind that China, which has the toughest rivals, okay, in the solar industry, has been a big-time supporter of renewables. The government sees such forms of energy as very strategic for the growth of the country. In other words, FSLR is really in a squeeze right now. But not having the support of the United States, okay, is going to be extremely tough for FSLR and will make it difficult for FSLR to generate sustainable returns for investors. First Solar, symbol FSLR. Next position I want to give you is Twilio, symbol TWLO. Now, there is little doubt that Twilio is an impressive company. I give them that. The founders were they were, shall we say, the trailblazers in using cloud computing back in early 2008. And they used it to target the communications industry. They were also smart enough with the business model that is only charging for the service as usage becomes meaningful. Because of this, TWLO, talking about Twilio Inc., got quick traction with developers. But there is something about the company that makes the shares a good short, and that is customer concentration. You see, this actually explains the recent weakness in the stock itself. During the last earnings call, TWLO disclosed that its biggest customer, Uber, was reducing its usage of the service. In fact, from Q4 to Q1, it declined from 17% of the total revenues to 12%. But Uber is certainly not the only heavy customer. There is also Facebook, WhatsApp, okay, also, which accounts for a hefty 9% of total revenues. And then there's something else. You see, it's troubling that these customers have top-notch engineering teams which can develop their own solutions. But there are also many TWLO alternatives on the market, such as Cisco Systems, Vonage Holdings, Nexmo, Callfire, and Bandwidth.com. Yet the biggest rival is likely to be, once again, Amazon, which has built its own communications platform. Now, given its massive customer base, okay, of AWS cloud customers, talking about those Amazon cloud customers, as well as its panache for aggressive pricing, the company is likely to be in a position to make large gains in market share and adds a sum at the expense of TWLO, giving TWLO another headache, if you will. Handwriting's on the wall for this particular company. It doesn't have the capital base or the customer base to maintain its market share, and its market share is eroding. So we need to be looking at put option or call option or shorting, put option or shorting on TWLO, talking about that Twillo Inc. Also, analyze First Solar, symbol FSLR for put option. You also want to be looking at that Under Armour symbol UA, and it also trades under symbol UAA as a possible put option, and Valiant Pharmaceuticals, symbol VRX, and they have multiple headaches, excuse the pun, over there at Valiant Pharmaceuticals. Family members, loading you up with information that is monetizable, right? NOW, backed with empirical evidence so that you can do your own due diligence as well. When we come back,